Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. I'll be talking to our Head of Research, Jasper Lawler, to discuss the future for Facebook and the tech sector, the Brexit transition deal and the persistent US dollar weakness. But before that, I'll run down some of the top corporate results to watch this week. We have AG Bar, Game Digital and Ladbrokes Coral reporting on Tuesday, DFS Monsanto and Walgreen on Wednesday, Constellation Brands on Thursday and Capita will be releasing earnings on Friday. Now moving on to the economic calendar, the final reading for fourth quarter US GDP is out on Wednesday. Then it's German unemployment, German CPI, UK final quarter GDP and US core PCE inflation all on Thursday. And it's a quiet week to the end of the week with most European and US stock markets closed for Good Friday. So Jasper, Facebook, we're facing another scandal.
I know, so the first one was fake news, right? And how Facebook are perhaps influencing elections. And this one had a bit of an election tone to it as well. Obviously, this Cambridge Analytica situation, basically just kind of putting a bit of a spotlight on Facebook's business model, which is harvesting everyone's data and then selling it on for huge profits. And obviously along the way, some of that data wasn't protected. So that is actually a huge issue for Facebook. But obviously what we're focusing on here is a little bit more along the lines of, well, what happens for the share price? It's down around 10%. That's correction territory. Naturally, people are going to come in looking for a bargain here because this is a share price that's gone up year after year, 10% down. You know, if you still believe in Facebook, golden opportunity because the sentiment's bad. But actually, if you look at the, what is fundamentally going to change for Facebook in the near term, are advertisers going to abandon Facebook after this? They may sort of say a few things just for publicity reasons, but actually, Facebook and Google really the only games in town when it comes to internet advertising. So most of these firms are just going to want to stick with Facebook. And actually, what this has really highlighted is how good Facebook are at honing in on personal data and getting those targeted ads at people. So I don't think the firms are going to abandon Facebook. Are people going to abandon Facebook? Well, I mean, look at the example of banks during the financial crisis. All sorts of shenanigans going on there. How many people have actually left their bank? Not many, right? Exactly. So actually people tend to just look through these things. So that all being said, the earnings picture should remain the same for Facebook. So it's a matter of whether the sentiment stays bad and that holds back the shares. But fundamentally, I mean, it's at a quite a low valuation now relative to their earnings. So I can certainly see how this would just jump straight back again.
Yeah. Okay. And what about wider implications for the rest of the tech sector?
Well, I think that what we were originally talking about there is the use of personal data. For me, short-term risks seem skewed towards evaporating, essentially, for these firms. But I think longer haul, the main risks are actually these firms themselves kind of get ahead of a bit of criticism about the way they handle data and restrict their own handling of data. And so that would just decrease how much they can monetize the data they're collecting and naturally lower monetization, lower profits. That, or if they don't choose to do that, then actually it's going down the road at some point. I think regulation has to tighten. The EU love their regulations the most. Probably they're going to be ahead of the game here, but probably I suspect, especially if there seems to be a bit of a shift in public opinion, then probably the US will follow as well. So that tighter regulation down the road, I think, is a distinct headwind to not all of the tech sector. Obviously, there's lots of firms that aren't necessarily involved in using data for advertising and other means, but those firms that are, Google, Facebook, Apple to some extent, newer firms that are coming in like Spotify, I think, they have a less certain future now.
Yeah, so. Okay. All right, so moving on, we got the transition deal. The removal of uncertainty must be a good thing, though.
Yeah, I mean, we saw that in the reaction in the pound. It shot higher as soon as that got announced that the deal was solved. Obviously, there's a few things. The Irish still a bit of an issue. What to do with that border? So that's there's a few things there that mean this transition deal still may not happen, but in essence, it's all been agreed. So that does take a lot of uncertainty off the table. And I think where you're seeing that the most is with the euro sterling pair. That's been in a real clear-cut sideways range for a long time now. With the pound against the dollar, there's a bit more of a dollar consideration here. I know we're going to talk about the dollar weakness in just a minute. But euro sterling, more of a kind of Brexit barometer, if you like. So I think if we take out that support in that very clear-cut range, you can see on a daily or weekly chart, you know, that's the sign right there that actually a lot of Brexit tension has been alleviated and at least pushed down the road.
Okay, fine, yeah. And so US growth and inflation statistics this week, coming after the Fed hiked, but the dollar still dropped.
Yes, I mean, so the Fed, everyone knew the Fed was going to hike, basically, as you said there. So the market reaction wasn't to the hiking, it was to the fact that actually the dot plots still indicated 3 rate hikes in 2018, not 4, as some people were suspecting. So Jay Powell, in his first testimony, he pretty much played it straight down the middle. And so markets didn't get too rocked from this, but it was just a bit of a disappointment on the dollar side because of that near term. A few people have been expecting maybe they change to 4 hikes this year because the economy is doing well. So we'll have to see from this data next week, the final GDP number, whether that confirms the kind of decent growth streak the US has been having. And then inflation is the continual reason why perhaps they're not edging up to the 4 hikes this year. So if we see a little jump in their measure of inflation, like we did in CPI, then maybe, you know, over the next course of a few meetings, then maybe we do add it up to 4 again. For the moment, we're not. And the dollar's just in a downtrend and it's struggling to break from it.
Okay, fine. Thank you so much, Jasper. And thank you all for watching. If you wish to follow LCG on social media, please do so.